Thanks for joining us live today. You're about to hear from Raghee Horner, Director of Sector Secrets at Simpler Trading. With more than 35 years of consistent profitability, Raghee will walk through how she reads market structure, identifies leading sectors, and builds disciplined consistency, giving traders a clearer framework for navigating the markets in 2026. We are thrilled that she's taken the time to offer us her knowledge this evening, and looks like all the technology is actually working today, Raghee. I apologize for the intro not working great last time, but we are ready to rock and roll now. The floor is set. The stage is all yours. Please take it away.
Hey traders, Raghee here. Great to see everybody. Before we get started, let's just make sure we've got some good audio and good video. Should be good to go. Happy Thursday evening, everybody. All right, good to go. Awesome. Thank you for being here. Hello, hello. All right. So welcome, welcome. For those of you that may not know who I am, I'm Raghee Horner, and I've been trading for 35 years, actually close to 38, veteran of options and futures trading. Tonight is all about my sharing with you the skills and strategies that could help you turn the corner in becoming, my two favorite words, consistently profitable. We want consistently profitable trading, yep, with P&Ls that look like steady uptrends. Hey, let's go make bank, Raghee. All right, so let's get to it. That's a great way to kick it off. Let's get to it. All right, as we know, there are no guarantees in life. There's no tooth fairy either. The same with trading. There are no guarantees, gang. Trade at your own risk. We'll say your best defense is education and practice. Those of you that are here tonight obviously subscribe to those principles already. So kudos to you. And let's take it away. Who is tonight's conversation for? Option stocks, ETF, futures traders, day traders, swing traders, long-term account growth traders, traders that are new to trading, traders who have been trading for a while, but you're not quite seeing the account growth that you want. Traders who've been trading accounts from 5,000 to 500,000, the strategies are all the same. So traders who keep doing the same thing over and over and over and aren't seeing a different outcome. There is a way to get out of this frustrating cycle. Sounds pretty darn good. All right. What is consistent account growth? I think if I got another tattoo, that's exactly what it would be. See your money, your account size grow one trade at a time over a period of time, and ultimately year after year after year, right? That is consistent account growth. Having more money in your account at the end of each year than you did at the beginning of each year. That is consistent account growth. So as an example, where are my drawing tools? It's not a session unless I'm scribbling on these charts. Let's see here. There we go. Let's get some drawing tools going. And there we go. So as an example, if you were to invest $2,000 on a trade, and you want that initial investment to eventually be worth, say, $3,000. That is the goal of being a trader. Take a sum of money, grow it. The trick is, how do you get that to happen consistently, time and time again? And then add in, gang, remember, add in the drawdowns of losses, right? Because they will happen. I promise you, they're going to happen. That's what we're talking about here tonight. Not just one strategy for the market, right? Not just one strategy for one market condition, but filling in the gaps between knowledge and execution for all markets, becoming fluent and how to trade, right? The entire trade of trading, how it all works together. So let me show you what I mean. Does everyone know there's no one magical unicorn in trading? All right, so this is what I'm talking about. What you're looking at is my P&L for 2026. And yes, this is Jan 1 of 2026 to Jan 16. And I know it's a few days past that, but when I capture this, by Jan 16, I had earned a profit of $209,000, $209,650 in swing trades alone. And by the way, that number is actually higher because some of the open trades and even trades that we've taken since have grown it. So what are swing trades? So trades that we hold for days to weeks. The number now is higher, right? Because more trades have been closed, as I mentioned. And we'll get into that shortly. I started on Jan 1 with a $750,000 account. Don't worry about the numbers. This just happens to be my account size. And remember, you don't need a $750,000 account to use the tools and strategies that we're going to talk about tonight. Consistent growth can be had in any account size. I do emphasize that. The principles remain exactly the same. So I will say there's a minimum. That we get that a lot. Rog, what's the minimum? I really wouldn't say anything less than 7,500. You want to give yourself a starting, real fighting chance. So $7,500 minimum to start. But if you have 15,000, 25,000, $1 million account, the rules are exactly the same. But how can that be? Doesn't a different size account trade differently? We typically trade options contracts that trade between $200 and $500 per contract. All right. So think about that number. We typically trade options contracts that are between $200 to $500. Sometimes it might be a little more, sometimes it might be a little less, right? So the difference is how many contracts you can afford or should be putting at risk at a given time. The consistent growth is not based on the number of contracts you trade. Consistent growth is about making one successful trade after another, knowing how to position yourself to reap the rewards and minimize the effects of losses on your account. Notice I was in the red at the very start of the year, but it did not draw down on my account in any significant way or stop me from being profitable. My win rate is about 68% on average. That means that we all have losses sometimes, but the difference in still succeeding, despite those losses, is knowing how to handle losses, as well as, by the way, handling gains. So when you start consistently getting to your trading goals, the word consistently is going to be something we talk about a lot. Seeing the growth you're looking for, the red won't seem so bad because you're still making money. All right, so I don't mind that red there. We're playing out our process. We're going to talk a lot about that. All right, so let's move on here. Let's look at a little bit more detail. I say a little bit. This is kind of a dissection of that trade result. So let's look at more detail on the trades that made up the profits and losses so far this year. So by the way, this is TradesViz. You'll notice I use TradesViz for my trades. This is the trade tracking software I use. There's any number of them. Don't get hung up on the TradesViz. That's just what this happens to be. The symbols you're seeing listed are all the swing trades that we've taken so far this year in the Sector Secrets Mastery. These trades make up over $200,000 in profit that I've made so far this year. We're going to break down each of these trades tonight, but I wanted to give you an overview in one spot so you can see what it looks like when it's all together. So firstly, notice that it's not a long list of symbols. Trading more is never the answer. Rarely does that work with getting traders to their goal of being consistently profitable. Those symbols are carefully handpicked because they stood the test of our process. And why would we even take a trade to start with, right? Notice that all these are calls. No Greeks, no complicated strategies, long calls, long puts is all we use in the Sector Secrets Mastery. The green box next to each symbol is the P&L per trade, right? Including the loss here, right? That's the P&L per trade, aka our profit and loss. So notice we have mostly green boxes, but we have some red splashes there too. Losses are going to happen. Although they will always sting a little bit, they do not change the outcome of steady growth. Super important. All right. So there's a what did it say, 40,000 foot view on what we've done so far, and you can see just a couple little things here. Closed P&L. We have our realized P&L. We have some unrealized gains here, so that's another 11,000 on top of that. And you can see a little bit negative before we started. That's the way trading looks, gang. All right, moving on. The gift of automation. Before we get into those trade examples, let's talk about the indicators, all those colors and lines and shapes that you're going to see on my charts. Please do not get stuck on what they are, because I will be telling you about them while we look at the trades on the charts. These indicators create a system that automatically gives me key levels I need to look at before I take a trade. These indicators are collectively called the top tier pro tools. Do not get stuck on these, because I will explain them as we continue on. Although they are not required, you do not have to have these. I can tell you that I've spent decades doing the educating, the practicing part for you and myself. And decades later, the top tier pro tools are my foundation. That is my go-to resource before I'm willing to take any trade. So this is where I start. Have a toolkit that you trust, that has stood the test of time, years if not decades. The proof is in your P&L. Again, steady green uptrend. Who doesn't want that? So we'll get into top tier pro wave, the candles, the dots, the structure, Darvish, secret squiggle. We'll cover these as we go along. All right. So let's get to our first example. All right. So before we start talking about the trade, let's start with why Google? Why Google? I can't stress enough of this one fact. You ready? Maybe write it down. What you trade is more important than how you trade it. Watch list building is where you need to spend the majority of your time. Having the best strategies, habits, indicators, all that stuff does not matter if you're doing the right thing for the wrong symbols. So let me show you how we find and scan symbols to build a watch list of the right symbols, right? So again, when you take a look at something like Google, this is what a right symbol can look like in terms of being profitable. Watch list building, all right? This is huge. I even say that 80% of your time should be spent building a watch list. Trading is really 20% of what we do. So step one, you ready? Step one of watch list building is understanding the principles of relative outperformers and how to use this way to scan to find symbols with the highest probability of follow through. So relative outperforming, just really quickly, that just simply means it's performing better than other things. It's a comparative thing. So Google was a relative outperformer in XLC. Right, you can see right here, Google is a relative outperformer in XLC, both Goog and Google. By the way, Comcast is too, just to mention that. How do I know this? We looked at the XLC, which is the communications ETF, so that we could see how the stocks within the ETF were performing. And we look for the symbols that are outperforming the others. So these are all high concentration weighted stocks in the XLC ETF. These are stocks that are within that ETF. So index sector stock is how we find symbols that are most relevant and likely to yield us the results that we're looking for. So think of looking for a new place to live. First you pick the state, then the city within that state, and then the neighborhood within that city. You are looking for the area that best suits your needs. Now, for us traders, our needs are looking for symbols that show the highest likelihood of follow through, right? That's how we get paid, follow through. Bills get us in, but follow through pays us. And notice that Google is the best stock in the group based on the trend. I'm going to show you what I'm talking about here. Based on the trend, you can see right here, being green. Look for those green boxes. Here's another example of how having the right automated tools really stands out so you can see what's happening at a glance with the color coding. The green trade flag that says Momo and trend tells us that there's an uptrend, there's bullish momentum, and there's a bullish trend, and that follow through is in our favor to the upside. Only then do I start looking for a setup, right? So just really quickly, notice I'm not talking about T-Mobile, Charter, Netflix, right? None of that. What's already strong, right? That's how you find symbols that are going to give you the kind of results we're talking about. So let's come on back to Google. So now that Google is on our radar, it's on our watch list, now we're going to build out the trade. We always want to buy calls in a support zone. Now, for the purposes of our chart, the support zones are the gray areas, right, on this chart, this gray zone on the chart. By the way, the yellow areas, just for comparison, those are resistance levels. So I'm looking for support in the gray areas, and those are called the daily price movement range, or the DPMR. The gray zone is automatically plotted on the chart, so there's no guesswork as to where that support is and where I want to buy. The goal is to buy at least 2 to 3 weeks, right? Let me get my mouse here. 2 to 3 weeks before expiration. So for those who want to know how much time to expiration, 2 to 3 weeks. Hey, if you can do more, that's great, but 2 to 3 weeks is where I'm going to start. And then the strike I'm going to be looking for is either at the money or slightly in the money. That's what I'll be looking for, at the money or slightly in the money call, depending on which has at least 750 open interest. Very important there, gang. That's how I look for what I'm going to buy for a setup. So in this case, that was the 315 call. We bought the 315 call that expired January 16. So at least 2 or 3 weeks at the money or slightly in the money. The candles you're seeing are the top tier candles. These color coded candles that you're seeing here, these are not traditional Japanese candlesticks. The top tier candles are consistently green, meaning we have a trend, or at least we have a bullish expectation, right? The expectation for follow through is bullish because, again, we have at least 5 green candles in a row. Then we layer on the guidance from the multi-structure. What's that? Trish is dancing at me? Oh, okay. The Trish boss is in the house, by the way, those of you that are wondering. All right. So we layer on the guide. So we're going to go through the first couple this first example really slow, and then we're going to pick up the pace here, gang. So first off, we talked about the green color. When you see at least 5 of these in a row, get bullish and stay bullish. Then we layer in the multi-structure. That's this indicator at the bottom of the chart. And as we entered this trade, the momentum was bullish. The trend was neutral, but the momentum was bullish. There's no reason to buy puts. All right, so when we look at the multi-structure, there's 3 colors. There's magenta, that's bearish. There's green, that's bullish, and there's gray, that's neutral. And the multi-structure is helpful because that's going to give you the guidance for what to expect price action to do. The multi-structure helps us give more confidence to the trade because it's easy to want to jump out of a winner too soon. But if you see the candles are remaining green and the momentum's remaining bullish, you're going to have more visual proof to let this winner run. So those of you that are lacking that guidance, Rog, I don't know if it's going to turn around on me all of a sudden. What are the chances of it following through? Those two tools alone are going to give you a lot of visual cues and confidence. So here's a common mistake traders make with symbols like this. They, number one, chase the move higher, buying at these highs, instead of waiting for a pullback, right? They chase it up here rather than waiting for something like this. We don't want to be buying at the highs. And the second mistake that's made is they often wait for the candle to close instead of using price zones to enter. There's a big one here, gang. I never wait for a candle to close. As soon as price is in the zone, I'm using price. As soon as it's in the zone, that's when I want to enter. So I got in at $505 per contract. Final close was $1,800 per contract. And it yielded, as you can see here, a very nice profit, almost $1,300 per contract. This was the trade I think I showed you all. Google ultimately for us yielded $119,290. All right, so nice win, but that's how we got to Google. So keep in mind this watch list building process to the symbol. All right, so now let's pick up the pace. Now you got an idea of what you're looking at, and you're going to see how easily, just that quick walkthrough, the next chart we look at, watch how quickly all these things start popping out at you. So in this case, we've got IWM, which is the Russell 2000 ETF. So how could a trader with $10,000 in their account have taken this trade? All right. Notice that the price per contract was $405. I took a scale out at $7.70. So I took about $3.65 of profit, or $365. And then I'll let the trade continue to do the work. Ultimately, we closed it out at just over $2,000. So this trade was just shy of $73,000 in total profit. But how could, again, a trader with $10,000 take it? For a smaller account, the trade could have been taken with 1 to up to 4 contracts. All right, so maybe you're not buying as many contracts as I am, but remember I said any size account, 7,500 or greater, can participate. Right? So depending on your risk tolerance, you could be in anywhere from 1 to 4 contracts. If you are willing to risk 3%, just 3% of your account on the symbol. And I usually don't go much over 3% or much less. That's usually a very common account risk that I recommend. This would be considered then an entry where you'd have a full budget of up to $1,600 worth of contracts. Up to, not exceeding. So remember, the profit is the same no matter number of contracts you have, the profit per contract, right? So in this case, if you had 4 $405 contracts, you still would have ultimately closed out your last contract or your last half of contracts at the same price. It's just the contract multiplier that's different. So take the profit times the number of contracts you have, and those are your gains. So steady account growth comes, again, from one good trade after another, not the number of contracts that you're trading. So what did the automated tools tell me about this trade setup? All right, so the zone for entry was the gray zone of the daily price movement range. And that's all these gray areas that offer support just below the candles. That's support. Take a look at the multi-structure, which, by the way, started off neutral. This lower row was gray. Neutral is fine because remember, I can take my cues from the candle colors. If you have at least 5 greens in a row, you've got a bullish environment. You can be looking for long calls. So I look at, again, the daily price movement range, the multi-structure, which started off neutral, then turned into a trend for a bit there, showing us that there's bullishness. I want those 5 green top tier candles in a row because I take a trade when there's a high probability of continuation. These indicators aren't a signal. They're taking the entire map of price action and giving you be bullish here, be bearish here, be neutral. So that's what I mean by the automation. Top tier candles measure momentum. The color of those candles measure momentum and trend, as well as participation, which is really important because that's the flow. That's the crowd that moves the symbol higher. Our goal is to get out in front of it, and the tools set up the trade for just that. By the way, these two yellow lines, these are Darvis support and Darvis resistance. Notice how price did test support before it took off, because that's where the buyers were waiting. Price tested this level, and that's a big part of why we also bounced. These are drawn automatically, so there's no bias and there's no error. You take away the emotions, trade based on what these lines and levels are telling you, not what you're feeling, right? Not what you're thinking. Trade what you see, not what you think. So that's the example of IWM, putting these tools together. All right, let's take a look at another example. And as we go along with these, actually, we're going to jump on over to something actually pretty cool. So as we keep looking at some of these charts together, start looking at these tools in the order in which we're talking about, the candles, the multi-structure, the support and resistance. Now, this one is something that I mentioned I really want to talk about, and we're going to take a quick break from the charts for just a moment and talk about a market outlook for 2026. All right. It's been a great year so far, but we're 22 days into it. I think it's going to continue, but right now it's kind of tough to be optimistic, isn't it? So let's talk about the macro view based on the data. Traders and investors have accepted that rates won't be cut again until after April. You might say, Rog, how can you be so sure about this? Well, take a look. The current target rate for the June meeting is showing that we're going to be 45% plus 14% plus another 1.5%. Cumulatively, we are going to have at least 1 to 2 rate cuts by or on the June meeting. I know it's only January, but that's where expectations are heading. So we're going to always look at macro based on the data. Despite the stock market waiting for these cuts, it's been really resilient. And even when I was planning on talking about this was before all the drama has happened the last, 72 hours or so, right? It's still trading near highs, of course, with a lot of volatility. So why the volatility? What's going on, Rog? Partly geopolitics, which cannot be timed, but can be traded by focusing on things like gold and gold miners. So you say, Rog, if I want to deal with all this craziness, what are 2 places I can look? Gold and gold miners. So let's talk about this graph a little bit more and why I'm optimistic for the second half of the year. Here's the cue about rate cuts. Rate cuts themselves, which again, as I said, are about 60% probable. You add this and this column together. This represents 1 rate cut. This represents 2. So there's a 60% chance cumulatively that we'll be looking at lower rates at the June 17 meeting, knowing what we know now. All right. So it's expecting the rate cuts. The reason we have to talk about this now and prepare for this now and know what to do is because expecting rate cuts as we get closer to April and May is what tends to propel the market higher. Lower rates ease a lot of woes. Research and development, investment, expansion, hiring, training, all of these are the historical reaction to lower rates, as well as the stock market rallying on that expectation. So I'm not talking about in June, get excited for this. You prepare for it now. You understand how to trade this now. The stock market loves lower rates, and with inflation metrics that are followed by the Federal Reserve, like the PCE, these are gradually descending. There are fewer and fewer reasons to not see rate cuts from the new head of the Fed. In other words, they're going to have to cut. The data is going to push them there. Now, for the volatility, a couple things to remember. Obviously, we know Greenland is a big narrative, tariffs, the SCOTUS Supreme Court decision, and most recently, the Japanese government bond yields, which, by the way, after peaking at around 4%, have started to pull back. That's good for the U.S. stock market, right? That Japanese government bond, keep an eye on that. We do that in the Sector Secrets Mastery along with the SCOTUS decision on tariffs. There are ways to handle this volatility, but to handle it, you have to know what to tune in and tune out. And we cover this in the Sector Secrets Mastery room daily so everyone can be ready for those days and time their entries properly. Okay? So I'm very optimistic as we go into the second half of the year, gang. No reason to be pessimist. As I like to say, bulls make money, bears like being on television. All right, so let's go back to the charts here. Let's kind of test what you've already learned a little bit of. Let's look at our $855 per contract. If you had 3, 10, 20 contracts, remember your profit per contract is the same. Account size is only relevant to show how many contracts you should be trading. The principles and the strategies are exactly the same. In this gold trade, GLD, which is the gold ETF, the multi-structure, so how many folks are already looking at the bottom of the chart? The multi-structure is absolutely showing us bullish momentum, bullish trend. The trend's super important. Those double green lines at the bottom of the chart. Please, gang, never fight the trend and look only for long calls in an uptrend. The zone for entry was the daily price movement range. Remember the gray zone. And even though I'm showing you individual setups, you might look at a chart and see numerous opportunities to buy from the gray zone. That's the point, right? This updates every day to show you the most current and accurate zone for support. And this is where we bought the at the money calls for GLD with the January 16 expiration. We bought those in the second. We were in those for 2 weeks. The consistency of the top tier candles, look at all that green. That was another reason for the bullish expectation and the patience to the upside. Here's a little bit about risk. You ready? Risk was 25% of premium paid, or 25 cents on the dollar. Never, gang, do I recommend or myself risk max debit. Max debit is just another way of saying 100% risk on premium paid, or risk it all, which does not make sense since a trade will be invalid long before you lose all the premium value. You're going to know that, hey, before all that premium value is gone, this trade's probably not going to work out. Why not take some of your own money back? So what we do is we take a paper cut, 25% of premium paid, and move on, because there's always another opportunity around the corner. So start putting all these tools together. Look at the colors, look at the zones, look at the structure, and this trade ultimately yielded $2,800 per contract. So again, if you had 1 contract, 3 contracts, think about how you could trade this. I had 35, just to give you, a comparison. All right, next example. And gang, if you do have questions, feel free to ask. Kirk asked, do I ever add? I never add to a loser, and I never add to a winner. Our trading blueprint starts with specific levels we're going to buy from, and we stick with that blueprint. That's what following a trading plan for me is. Yes. Okay. So let's talk about XLI Industrials. It's a trade that's still open and working. So let's talk about exits on our trades. We talked about entries. What about exits? Right? They're just as important as entries, and our tools help us here too. How do the tools help me know when to take profit? In other words, how do I determine targets? The same automation that allows for that unbiased automation of my entry levels helps me with where to take profit. So in this example, notice these gold colored zones, this kind of yellow zone on the chart. All right? Those are resistance levels of the daily price movement range, or that DPMR. I prefer to have at least, so here's a big thing if you want to jot this down, gang, I prefer to have at least 25 to 50% reward at the first target, or T1. What this allows for is a 1-to-1 or a 1-to-2 risk reward, rather than risking more than I could make on the first target. Here's the reason a lot of traders fail. They'll risk 3 to make 1. Oh, they'll risk 2 to make 1. That's upside down, right? We never want to do that. So again, what I want to do is have that 1-to-1 or 1-to-2 risk reward, rather than risking more than I could make at the first target. The idea is this: being that once I have a 25 to 50% return, this is equal to or twice as much as my risk. My reward could be up to twice as much as my risk. And that's a great metric to follow for consistent account growth. I pay myself at T1, and then I let the trade run a bit until I get to T2, or the second target. Then I pay myself again. And if you have enough contracts, or the setup is still giving us all the signs with our automated tools that it's still working, you'll keep letting it ride ultimately to a T3 or a third target, right? So you want to be a little greedy up here. We want to get greedy as the trade goes in our favor. Most traders wait forever for the first target and then they scale out really quick. And in something like XLI or gold, by doing that, you're leaving a lot of money on the table. So this is a shift in that timing. Now, I do recommend being able to trade at least 3 contracts per symbol so you can optimize up to 3 exits. Using these strategies to manage our trades is what we do each and every day in the Sector Secrets Mastery. In fact, if I haven't said it already, every one of the trades that we're talking about right now, these are alerts that were sent to Sector Secrets Mastery members, every single one of them with the full blueprint for the trade. So this is how it's worked so far in the XLI. We bought the XLI 20 February, 160 calls. Remember I said we just look at long calls or long puts, really simple. We paid $365 for them. Once I made my return, again, I'm looking at minimum 25 to 50%, about $4.90, I can take some of the contracts off the table and pay myself. Next, I let the trade continue to run, and I took some more contracts off the table at $6.50, right? So far I've made about, on XLI, actually at this point, I've made about $6,750 on this trade with about 50 contracts, and the trade is still open. As I'm scaling out, I still have some more contracts left. This is how we put all our strategies and tools to work for what symbol to trade, when to get in, when to get out, how to manage losses, and how to create that fluency, that understanding of this rinse and repeat system to get where you want to go in your trading journey. All right. And I mentioned before, every one of these was a trade we sent out to members. Well, so is this one. We're going to talk about a loss. A lot of folks said, Rob, what do you do with losses? How do you handle losses? Okay. And any of you that know me, I love speaking about losses because this is where we will learn the most about ourselves and the errors that we might be making. So this was the Exxon 16 January 122 call. Are you ready for this? I had 348 contracts, right? These cost, these XLI or XLM, sorry, cost, what were they? How much they cost me? I'm trying to remember what that cost me. I'll tell you right now. Those initially cost me $2.30 per contract. Okay, so $230. And my total loss in my account was $20,880. But hey, remember, I'm still up $200,000 so far this year. It's actually $214 with an unrealized P&L of another $11,350. So here's why you need to cut your losses quickly and move on. So you might say, Rob, 20,000. Remember, my Google winner is 119,000. So keep that in perspective. Now, think about how many contracts you would be trading. Maybe not 348, maybe it's 4. Keep that in mind. But here's the art of handling a loss. The main idea behind losses is that, number one, write this down. They are going to happen. Even a 70% win rate means 3 losses for every 10 trades. Do not add to losses, hoping you can skip right past losses, right? Do not think you can right the ship by adding to a loser. Look at your charts, take away the emotion. A 25% loss of premium, and that's the paper cut. You cut it. Once a trade reaches this threshold of 25% premium loss, I close it, gang, period. I don't overthink it. I don't think what if. I don't add to a loser. I close it. And by doing that, I'm freeing up mental and quite literal capital to find another opportunity. This process has kept me, super important, gang. Doing this, what I'm teaching you right now, has kept me from ever having blown up an account. I've never blown up an account. A blown up account, by the way, is really losing basically 55% of the value of your account, because recovering from that 55% drawdown would need better than a 100% win rate just to get back to even. So notice, even though this is a loss, is this catastrophic? If you let a $230 contract turn into $170, right? Is that going to change your life? It shouldn't. And that's the point. All right. So love talking about losses. Well, let's talk about another one. This one's a little different. One of the things that traders fear is a gap against them. And a gap is when price jumps from the close of one candle to the open, right? So you're left with a space on the chart where no trades have occurred. That's what a gap is. So it jumps from the close of one candle to the open of the next, right? Leaving behind a gap. Now, by following the trend, the probability that gaps will favor your position is pretty darn high. But when news hits without warning, like it did to financials, right? In this case, news hit. And news typically hits without warning. That's nearly always how news works. Trades can be subjected to gaps against the position. It's going to happen. In this example, XLF was well on its way to continuing after the first target. In other words, we had gotten in at 195 and I'd taken some profits, scaled out, and gone to 225. Now, here's a really important thing to remember. After I hit the first target, I moved the stop loss to break even. In other words, if price gets to 190 to 195, that's basically break even. If the value of the option drops back to essentially what I paid for it. Okay? So I'll exit when it comes back down there. But with a gap, price can jump right over this level, which is what happened. The position was ultimately closed after the gap, right? Following the process of making sure account risk is always the first priority. Never, what could I make if I hang on? Or worse, let's add to a loser. Take the small loss and move on. All right, notice not once are we risking all $195. And even when it gapped against us, it only went $65 below the entry. That's not too bad, is it? All right. So far we've covered swing trades that made up the 200,000 plus profits that I've made so far. What we haven't talked about are some of the day trades we've taken so far this year. Yes, more money in our accounts. And yes, these are also trades that we take in the Sector Secrets Mastery. When we day trade, we look at the 5-minute time frame or the 5-minute chart. You'll see that in the upper left-hand corner here. Day trade means that we get in and out of the trade on the same day. And in this setup, this is the gold ETF, GLD, calls were bought when price sunk into the hourly price movement range, the HPMR, which again are these red and gold areas. We talked about the DPMR, right? The red and the gold, right, would be resistance. The green and the gray are support. So on the HPMR, the hourly price movement range, we just changed the color of the zones, and these are based on hour by hour historical volatility. So when price sunk into the hourly price movement range, in this case, the green zone, it works exactly like the daily price movement range, but again, it uses the hourly candle as opposed to the daily price movement range using the daily candle. The green zone of the hourly price movement range becomes our buy. That's where price is in the zone. Calls are less expensive since they pulled back. They had to pull back down into support, and that's where we take advantage of support. That's buying the dip, by the way, and that works intraday too if you have a high probability zone in a high probability process. The chart shows, let's take a look at the multi-structure here. The chart shows we have a neutral market with flashes of bullish momentum, right? You can see that there. And this is the key. Price was above the previous session close. Can't see my slide? Oh, no? Oh, how funny. All right, hang on, gang. The slides disappeared? Let's see here. How about now? All right, you can see it? Okay. Trish Boss saying she can't see my slides. All right. You can see them? All right. Trish Boss saying to make sure everyone can see the slides. So at the very bottom here, it shows a neutral trend, but you can see flashes of the bullish momentum. And here's the key, gang. Ready? Price is above the previous session close. Write this down. PSC. PSC. It means that we're still in the bullish side of expected follow through. Buying below, a day trade below the PSC is a common mistake traders make when they're looking for trades with follow through. The PSC is the previous session's 4 p.m. cash close. Write that down. The PSC is the previous session's 4 p.m. cash close. So when day trading, here are some of the common mistakes traders make that cause them to struggle and lose money. Number one, they start trading too early. Wait 5 minutes after the bell. Number two, they buy calls below the PSC and buy puts above the PSC, which is working against sentiment. So again, using that 4 p.m. cash close as a line in the sand, like I like to call it there, is one of the best directional filters a trader can use. You can start using that tomorrow in your day trades. Here's another huge mistake day traders make. They buy out of the money options. When you buy out of the money options, while yes, the premium is very cheap and tempting, they need much more volatility and follow through to gain in value. So do this. Stick with the closest expiration and at or slightly in the money strikes. Don't put yourself out on the edge of the tree limb with an out of the money, no matter how tempting that low price can be. All right, next example, IWM. So in this case, we bought IWM. These cost $1.20. And notice when you're day trading, the options are far less expensive, right? Only $120. We exited these at $345. Day trading relies on short-term time frames. Once again, I'm using the 5-minute time frame for my day trades. I use a 5-minute chart. And it can be quick. It's a quick style of trading, quick entry, quick exit. And therefore, it's really important that the levels are not random, biased, based on emotion, and here's an important one, not manually drawn. We must know our levels of entry beforehand to reduce that reactionary emotion-based trading, especially when day trading. How many times have you seen a quick candle and thought, I need to buy or sell that? How many times did it reverse as soon as you did, right? There are zones in trading that are almost invisible to the naked eye, and hourly price movement ranges, right there, give those zones clarity and context. And you can see here we whipped down to this hourly price movement range. Price action traded right down into the upper edge of that zone, that automated zone, and then took off. By the way, if you're a futures trader and you're looking at my IWM example, remember, you could also trade the mini or the micro Russell futures. So if you're a futures trader, that same highlighted zone is going to work for you with the futures. That's the precision that allows for well-timed entries. No guesswork. And the $120 option, this right here, had a $30 per contract risk. And it was closed at $345. That's a 10x return on risk, just to give you an example of what proper risk and reward can look like, proper risk management. So I talked about futures trading earlier, right? Okay, so it's not just options that these day trades can be used for. I kind of alluded to that with the previous example, right? Futures can be traded as well. In this example, this is the bond futures of the ZB, the 30-year. It triggered a trade with multiple tests of the green zone. You can see that right in here. By the way, these are trades that we set up in the Sector Secrets Mastery Gang. All right. The trend was neutral, right? Take a look. The multi-trend was gray. I know it was a little bit of bearish momentum, but we were still above the previous session close, and the trend was neutral. So remember, buy calls or long positions above that previous session close. Price was above the line in the sand, that PSC, really important. So while the move lower was really sharp, right? A lot of folks are freaking out when this is happening. Yes? Not us. So you can see how sharp that move was. Seeing zones invisible to most traders' eyes made the difference. The trade looks like it should have been maybe a short, and folks were probably shorting this and chasing the momentum lower, and then bam, we hit the floor, a floor that they didn't even see coming. Sorry, gang. I got booted out of my own room. Hang on, we'll get up and running again. Sit tight. There we go. All right, I'm back. All right, we're good? Back in. Okay, awesome. All right. So back to our ZB. So what happened here? I was mentioning that prices were selling off. I freaked out the internet with this example. All right. So prices were selling off, hit this floor. Most momentum traders are going to be doing what? Oh, we're tanking, right? And then they short. But what they didn't see is that this was the end of volatility expansion. This was the edge of that historical volatility movement. So the trade looks like it could have been a short, and a lot of traders might have chased the Momo lower, but look how price bounced from the hourly price movement range because the volatility had expanded to its exhaustion zone, which is the 68% probability of the zone. That's what this automation does. It looks at more than I could ever do manually. The algorithm says, hey, we're looking back at up to 6 months of historical volatility, and that zone is where we'd expect bonds to bounce between 10 and 11 a.m. That's how precise it is. It bounced, it triggered that long off support and a $500 per contract gain. It's not emotion. It's not guesswork. It's not just being a contrarian. It's data and probabilities. All right. So if you wanted to, let's say you say, Rag, I don't trade bonds. I don't trade futures. I want to give a little bit of both to everyone here. You could trade the TLT ETF as well. Just like before with the IWM, you could have traded Russell futures. In this case, you could have traded TLT as well. And I know we've gone over a lot tonight. And although super exciting, hopefully all those synapses are firing and a couple of aha moments, I hope, it could feel super overwhelming, which is not a bad thing. That means you're learning something new. You're learning a new way to get you where you want to go in your trading. So let's put all of this together that we've covered here tonight. This is your cheat sheet to account growth. All right. Trade the right symbols. Spend most of your time building a watch list. For me, that's the Pareto principle, right? That 80-20. Use your tools to tell you what is likely going to happen with a given symbol and what time is the right entry. Notice everything was automated. Learn to position size and manage your risk, right? How many contracts could you be buying in a $7,000 account, $20,000 account, $50,000 account? And remember, I talked about not risking more than 3% of your account per symbol. Know how to utilize your tools and set targets, as well as exits. Again, we use the automation for that. And then the best part, we rinse and repeat. These are the foundational pieces of getting to consistent account growth and reaching your trading goals, right? Okay, so hopefully everyone's thinking, all right, great, but how do I get this in all one place in a way that I can learn every single piece that we've been talking about? And that, my friends, this is where the transformation takes place in your trading. This is how you take your trading to the next level. We've designed an accelerator program for you where I've taken my 35 years of experience, put it all together for you so you're not spending years and sometimes tears learning. Time is money. Right? We even talked about some of the macro implications. Time is money. More time spent on trying to teach yourself or learn from a variety of other people that's causing you to miss out on opportunities to grow your account starting right now. Imagine how different things could look in just a year from now. Each package of the accelerator program includes your membership to mastery from 60 days to 1 year, depending on which package you choose. So that's time with me in the room. In the mastery is where we do our work. We build the watch lists with me. You're going to do that. Set up and manage our trades in a live environment. I will tell you exactly what I'm trading. Remember, every single one of the examples here were trades we took in the Sector Secrets Mastery, right? So we'll be together during these premium market hours. This is where the alerts can be found. I'll tell you more about that in just a sec. Because we're actually doing our jobs and putting our skills to work during these live trading sessions, sadly, there's just not going to be enough time to take deep dives into all these various aspects of trading. So with that in mind, this is where the accelerator portion takes part. So what we're going to look at is 8 weeks together, 1 to 2 times a week for specially curated topics so we can talk about one thing at a time and deep dive them. There will be 8 weekly sessions with me on Wednesdays and 3 bonus sessions with the Lorna Bot. So let me show you how this is all going to look in terms of the accelerator. All right. So each week, starting on Wednesday, January 28th, next Wednesday, and each following Wednesday through March 18, we're going to meet at noon Eastern, from noon to about 1 p.m. So this is where things get exciting, because I'm taking the decades of my experience, putting it all together for you, sharing the habits, the specific strategies, the things that I look at, why they matter to help you get a complete world of trading breakdown, one topic at a time. This is where that fluency begins, right? This is 8 hours of deep dive time, one topic at a time. So for those of you that are newer to trading, the great news is you're going to create strong habits this way, not have to undo old ones. However, for those of you that have been trading a while, I can't make guarantees, right? But this is where you'll fine tune your skills in a minimal amount of time. Stop spending your time trying to figure out why you aren't seeing the results you're looking for. I've been at this a really long time, gang, and I've done the homework. I've smashed a few keyboards, and here is what I'm presenting you. I'm giving you all the answers, right? The answers to the test, so to speak. We're going to cover topics such as how to get in and out of trades. This helps you manage risk. We're going to talk about figuring out how much you can afford to trade, when to take your profits off the table, when to let your winners run, how to minimize losses so they're barely a blip on your P&L, as I showed you all earlier with the TradesViz. Understand time frames and what fits into your schedule. I'm not talking about trading all day long, gang, by the way. Risk tolerance, we'll talk about that in a moment too. Risk tolerance, right? What is your risk tolerance? And interest. What are you interested in doing with the market? Where are your interests in terms of growing your account? What to do with economic events? We've had tons of them this week, and we've managed them without, stepping into a landmine. How? Because we're talking about macro views, understanding hot zones, and this is going to help you understand what is going on in the markets. I'm seeing a really strong positive market ahead of us in 2026, and it may not seem that way, but remember, financial media is going to scare you. We're here to empower you. It should be a very profitable year, and I really hope you'll be reaping the benefits of your hard work. So again, just imagine how you can transform when given the answers to the test, if you will. All right. So there are 3 bonus sessions with the Lorna Bot, and even after you and I spend 8 weeks diving into specific topics, we know there's going to be even more topics. So we've included another 3 hours with the Lorna Bot. She's really a human. That's an affectionate nickname we give her, the Lorna Bot. So she's going to be talking about even more aspects of trading that every trader needs to know. Yes, we've thought of everything here and put it together for you in this accelerator. Lorna's going to be covering topics such as, what do I need to consider when picking a broker? Super popular question. Types of charting platforms. How do I buy the right option? What are the features on my option chain? How do I understand all that? How do I set up an alert? Right? Yikes. What are all these options? No pun intended, or maybe a little pun intended. The tech part, gang, can be insanely, sadly overwhelming. But I assure you, it's an invaluable gift, because once you know how to use it, and too many traders are feeling far more frustrated than they have to, once you know how to use it, you're going to be able to use it in a way where your technology is going to be your trading partner. And then there are those who want to understand more about futures. How many folks here want to learn more about futures? Lauren is going to be chatting with you about that too. Because remember, some of these trades you can do with the futures, like IWM and GLD and TLT. There's a futures alternative. So she'll be talking with you about that as well. So even if you've been trading a long while, you think, oh, hey, I've got this all down, right? These are going to be great refresher sessions too. So for a lot of people who have been with me a while or just in trading for a while, these are going to be things that you're going to remember, oh my gosh, it's been so long, I forgot that. And some of these nuances can be huge needle movers. So it's a great refresher. 8 hours with me, 3 hours with Lorna, just for the accelerator portion of the program. And that is designed to help you accelerate your trading goals. We don't call it an accelerator for nothing. For those of you that are already Sector Secrets Mastery members, we do have a special package for you. So you can join us each week to tweak, refresh, ask questions, ask Lorna questions, grow your skill set. It's going to be a classroom environment. This offer should be there for you through the class link. If not, my Sector Secrets Mastery members, please give the office a call. They'll help you out. All right. So you can see the bonus sessions here, January 30th, February 6th, February 13th, and the topics that we'll be covering in those sessions. Now, what about the way we structure our trading life? Right? This is really important. The mastery is also included in the accelerator package. Let me say that again, gang. You get the accelerator. You're also going to be with me, depending on which package. So that's included. Length of time, again, depends on each package. And this is the room schedule. But this is more than just a room schedule, gang. This is how I've structured my trading life. You and I are going to be spending 10 hours a week live trading together. Every day, Monday through Friday, from 9:20 to 10:30 is our day trading time. So this is when I day trade. This is how I day trade in my life. That's what this schedule represents. We'll be looking for day trading opportunities. Then from 10:30 to 11:30, we do our swing trading setups. We work up our trades, or we manage the open trades. Every Monday, we also take time to build our watch list. So you're going to have a watch list at Monday by 11:30 a.m. Eastern that's going to list the specific sectors and stocks that I will be looking for opportunities in that week. Then, to fully cover all the time frames, once a month, we get together live to go over the long-term portfolio positions. Trades that are going to last months to weeks, or I should say months to years, using shares or leaps, right? Trades that last months to years using shares or leaps. Last time we talked, I showed you a recent example in Rocket Lab where we bought $1,550 leaps that are worth well north of $5,000 each right now. That's just an example of the kind of things that we're going to do in the long-term portfolio sessions. So along with those sessions, you're going to have another 3 hours a week with Lorna. Weekly tech sessions. Tech is never going to be your constraint anymore. That is not going to be what intimidates you when you have weekly tech support. All right, those tech sessions, indicators, platforms, platform questions, order entry questions, setting up your charts. We tackle that every week in a live environment. And then Lorna Butt also scalps with you twice a week. So bring your questions. But hang on, there's more that you get with your membership. There's more? Yeah, there's more. All right, so this is what is in the Sector Secrets Mastery. You get my personal weekly trading notes. You're going to get the top tier Outlook newsletter. Just a few things to highlight what you get with the Mastery, right? Daily trade reviews. So you want to know what we've traded, how things worked out that day. I send out a recap every day. That's something unique we do in the Sector Secrets Mastery. You get a daily review of the trades that we've taken in the room, where we got in, where we got out, scale out, stop out, whatever it may be. Weekly notes. Hey, you can't be in the room all the time. You want to see what notes I'm taking for myself, clarify something you went over. This is your resource, and I share my personal weekly notes with you all every single week. And then real-time alerts, right? So let's say you can't be in the room all the time. This is where you'll get the setups from me on trades that we are setting up and taking. Trade alerts that are alerts. It's a heads up. It's not a fill alert. I'm sending you out the blueprint before I break ground on the building, right? Trade alerts are alerts. They're a heads up of the setup that we're looking to trade, the price we're looking to get in at, the risk, in a full trading plan. That is what we call an alert in the Sector Secrets Mastery. And by the way, everything's archived. If you can't make it or you want to review any of the sessions, everything's recorded for you. All right, so the premium package is 90 days with me in the Sector Secrets Mastery, 8 accelerator deep dive sessions. You can see there, sessions with Lorna, top tier. All right, the premium package includes the accelerator breakout sessions. We've covered all that, plus all of the indicators we have talked about tonight. That top tier pro toolkit, the daily price movement ranges and the hourly price movement ranges, and the subscription. Okay. So that's 90 days of HPMRs and DPMRs. And again, time with me in the room, plus all the other things you get with being in the mastery. You'll also get 2 hour long tech sessions to get you up and running. So you're going to, one, two, oh, one, that's 1 2 hour session? Okay. 2 hour session. See, this is what the Trish boss is here. It's getting late and I'm getting punchy. All right. So you get a 2 hour tech session to get you up and running. How to install and use all of your indicators. And by the way, everything's recorded. So truly, this accelerator program has covered what's taken me over 30 plus years to learn. And we're here to share that process and that success with you starting right now. Super excited for this. All right. Moving on then to the top tier pro tools, the hourly price movement range, the DPMR, and our indicator tech session with LornaBot. So this is the special 2 hour set up your tools tech session with the LornaBot. She'll be hosting you for this. Gang, this is tomorrow. All right. This is your opportunity to get set up with all of the indicators, get your charts looking just like you need them to have, get everything running on your charts. There is nothing worse than getting a new tool and not being able to put it on your chart and know how to use it. This will not happen here. We give you everything you need to start with a solid foundation. No digging around for the information and the skills that you need. You're going to get them now. This session, like all the others, are going to be recorded. So you have it to go back to as often as you like, any old time that you'd like. So keep in mind the top tier pro tools, right? The Wave, the multi-structure, the Darvis, those are yours to keep. All right, those are yours to keep. All right, moving on to the elite package. All right, so this is really juicy. You ready? It's a very cool package. The elite package includes everything we've spoken about, plus it extends your time with me in the mastery to a full year. And you get a full year to the HPMRs and DPMRs. So imagine 12 months from now, after 1 year of trading with me, 1 year of using these tools, 1 year of the process, handling risk, dealing with all the macro issues, where you're going to be a year from now. This is where the transformation of an accelerator program can change your trading life, gang. Get where you want to be in your trading journey. So 1 year of the mastery, 1 year of the DPMRs and HPMRs. And by the way, for those of you that might have looked at those things a la carte, all right, you'll know what an amazing deal this is. So the elite package includes everything we've spoken about, but again, you're getting 1 year of the mastery membership. All right, again, 1 year of the hourly and daily price movement ranges. I think these are $800 a year each. So again, when you take a look at the total value of the elite program, it's insane. So 1 year, you won't, by the way, let me talk about HPMRs and DPMRs for a moment. This is the only place you get these. I created these tools well over a decade ago. This is automation and volatility. It's an algo, gang, by the way, that word, at its finest. Doesn't everybody want a crystal ball of where price has been and likely to go? While there may not be a crystal ball in trading, this is the closest thing to X-ray vision as you're going to get. So bear in mind the hourly price movement range, the daily price movement ranges, they do need to be updated every few weeks to keep the data accurate to the current volatility, right? We feed the algorithm the new data. With 1 year of the subscription, you're going to have the most accurate data possible, all right? Again, these standalone are $1,600 by themselves. So you get an idea of where we're at. So Sector Secrets Mastery Program, the elite package is the rocket package for sure. All right. 1 year of the mastery alone is worth $2,470, gang. Then you add the HPMRs and DPMRs for another, I think it's $800 a year. That's over $4,000 with just those subscriptions. So when I tell my members and I tell folks, when do you want to check out what I'm doing? This is exactly what we try to do for these programs. We try to put as much as we can, much of the goodness, as much of the indicators. And again, remember, on top of that, you're getting 8 hours of the accelerator deep dives with me, 3 more hours with Lorna, plus the 2-hour dedicated tech session. So the bottleneck is never the charts and your platform. This is how you change your trading life, gang. Get the information you need, the support that you're seeking. And, I haven't even talked about the camaraderie of our room. Our room is a really active room from 9:30 to 4. These are positive, supportive, focused people. We're not chit-chatting about the latest scuttlebutt out there. These are very focused people focused on making money in the market and supporting each other. I've never seen a room like this, and I'm so grateful that I get to spend my days with the folks in the Sector Secrets Mastery. It's the daily practice of putting your skills to work in a think tank. That's what I think of my members. We really are. We're looking out for each other. Hundreds of eyes are better than one. It's a think tank of knowledge. This is how you transform your trading without spending years alone trying to piecemeal things together, and you become the trader you want to be, consistently profitable, having a community to support you on those rough days, having a community to celebrate you on those great days, right? You focus on the time frames, the strategies, and your account size, and you build a customized approach with my guidance. All right. So again, can you imagine how your trading can change? So I don't take this lightly at all, gang. I'm super excited about this. Now, you can't make a session in the mastery, the deep dive sessions, the bonus sessions. Don't worry about it, gang. If we're on the mic, the session's being recorded. You can watch it. And by the way, one thing I want to mention is our sessions recordings are really cool because what we do is we always keep a clock, just like I am right now, on the screen. So if you ever want to go back and cover a particular topic, you might say, oh, you know what? I need to go back and take a look at what Rog was talking about between 10:15 and 10:20. We make it really easy to get the most out of these replays. We want you to get the best out of them. All right, if you need more information, we do have our Simpler Trading team folks on the line ready to help you now and Monday through Friday. So there's the contact information to pick up the class. Head on over to simplertrading.com/accelerator. If you have any questions, if you're a member and you want some information on the member pricing, give the office a call or drop them an email, okay? All right. So of course we do have PayPal payments. So add the product you'd like, click on PayPal credit. For those who want to take advantage of that, it's there. This is what our members have to say, right? This is the most content-rich trading room I have ever been in. Fantastic job of helping me fine-tune. One of the comments I heard this morning, and I'm trying to remember who said it, but it was a great comment. I thought, I need to remember this. I think Bobby from our room said, this is the most repeatable process on the planet so far. I love that. It's about that repeatable process. That was just this morning, right? So again, what our members have to say. GC paid for a year of Sector Secrets. I can't guarantee that. We've got a lot of members who've already paid for their entire year and indicators from just the trades we put on in roughly the last 2-3 weeks. All right. So one of my favorite things I see our members mention to new members when they join the room is you found the right place. Again, if you're tired of these salty, antagonistic, negative rooms, everything's going to crash, everything's awful. We don't do anything negative in the room. We talk about what we need to do together to have positive results. And you know what? I don't say that lightly. Yes, we all want to win, but not in an acidic environment, do we? So I'm really proud. I like to brag on my members a little bit because they're really good people. So I'm looking forward to a productive, profitable 2026 with you all. Consistent profitability is possible. Check out simplertrading.com/accelerator. And I can't wait to get to know you in the room and see where you're going to be just 12 months from now. All right. So we do have a couple questions. Trish Boss, do you have? All right. We do have some questions. Or there's some that you? Okay. Give me a second. I'll just kind of, amazing. Thank you, Geraldine. I appreciate that. I see I saw comments really flash by where someone said, I'm my own worst enemy. I'll tell you what, my friend, thank you for your frankness. One of the things that traders who struggle with, my enemy is in the mirror, my own worst, automation is what fixes that. Because overthinking, news, rumors, they can be really distracting and persuading. Yeah, Bobby, there you are. Hey, Bobby, I did say that. Yes, just this morning. I love that, Bobby. I had a big old smile on my face. You said, this is the most repeatable process on the planet. I loved it. But for those of you saying, Rod, I'm my own worst enemy, the automation helps with that. That's where the daily price limit range, hourly price limit range, the top tier pro, you're not going to be swayed by every single crazy headline because you can see the context of what's happening. All right. If you're interested in the basic package, again, you're going to get 60 days in the mastery with me. That's 2 full months. So while you're doing the 8-week accelerator, you're going to be with me in the room. So whatever you learn, then you can come back in the room and see us put it to work in real time with real trades. All right. Okay. What else do we have here? Chris, yes, the top tier, once you join the pro or the elite, that is yours to keep. They do not expire. The HPMRs and DPMRs need to be updated about every 3 to 4 weeks. So the algorithm remains exactly the same, but the data we feed it has to be updated. So there is some maintenance on that. But the top tier pro tools are yours to keep with the pro and the elite. You got it. And once you start getting used to having that information, you will wonder what you ever did without it. Okay. All right. So I think, and then we're going to be building. So I saw a couple of folks ask about scanning. This is Thursday, gang. Tomorrow is the tech session. And then Monday, just a handful of days from today, we're going to be getting into the first watch list building session for next week. So if you're wondering, Rob, what are you going to trade next week? We'll do that together for that session. And for those of you that are wondering, hey, Rob, you mentioned it's a refresher and, in terms of topics, remember, gang, there's always nuances. Let me go back to those sessions. There's always nuances you're going to pick up every single time. I would say for those of you that are saying, Rob, I'm in the room and maybe, this is it something that can really benefit me? I would say just weeks 1 and 2, those alone are going to be eye openers. Because scaling in and out of a trade, a lot of traders still struggle with it. You think you understand it till you go through the deep dive again. Position sizing and risk. Hey, maybe last year you were just getting started with the mastery of the position sizing guide. Your account's grown and you're a little bit more an advanced trader. I'm going to get into some of the advanced considerations for position sizing and risk. Those 2 sessions alone, I think, even for our existing members, are going to be huge needle movers. All right. Trish Boss is telling me, oh, that's right. So gang, the doors are going to close on this on the 28th. So when we start session number 1, that's going to be it. Right. So if you've been waiting to pick up the daily price limit ranges, the top tier tools, yeah, Trish Boss is reminding me, gang, make sure, again, doors are going to close on the 28th. But for those of you that are wondering, again, Rog, maybe I took the previous class, is this going to be redundant? I'm going to tell you right now, these 2 sessions alone, especially if it's been about 12 months, you're going to find, you ever read the same book twice? How many of you read the same book twice before? I know I do it all the time. Does it ever read like the same book again? Or every time you read it, you go, you know what? I'm a different trader now. I'm a different person now. I'm taking things from this second go round that I really didn't understand or know to understand the first time. Yeah. So I think those first 2, by the way, gang, macro deep dive, I haven't done that in a long time. And this year, that macro deep dive, that's not a repetitive thing. The macro that we have in 2026 is not the macro we had in 2025, right? Even hot zones, things that were very relevant a year or 2 ago in terms of high impact hot zones, those things evolve depending upon the current environment with the Federal Reserve. Remember, gang, we have a brand new head of the Fed coming in after May. That's going to change some things, right? We've got a crash in natural gas. That's going to change some things. We continue to have a lot of volatility in crude oil. That's going to change some things. We're likely to see a little bit more weakening dollar. We have this crazy movement in Japanese government bonds. If you're thinking, what the heck does all that mean to trading? That's where sessions 7 and 8 are going to be absolutely eye-opening. So there's always something, yeah, you're going to take away when you go through the process again. Okay, so yeah, I get that from members. Yeah, you're gonna find, wow, I'm a different trader and I'm seeing the information. I'm processing it in a way that reflects who I am now. All right. Okay, gang, I think I've caught up with most of the questions here. Yeah. What else have we got? I think I've caught up. I'm good. All right. Trish Boss says we're good. So, gang, thank you so much for the time. As always, have a great rest of your evening. Looking forward to seeing you in the tech session tomorrow. And then in our first watch list building together on Monday. And then on Wednesday, our very first session of the Deep Dive Accelerator. So we got a lot coming up. So don't dilly-dally. Tomorrow's session is going to be huge. Monday, we're going to build a watch list. And then on Wednesday, we're going to get into alerts and the art of scaling in and scaling out of trades. And if you've never done that, that is going to be a huge needle mover for the way that you're trading. Thanks, gang. Looking forward to meeting you. Looking forward to seeing you in the accelerator. I'll talk with you soon.